So I don't watch the news, and I was reminded recently why I don't watch the news. Is I was having dinner and the news happened to be on in the background. We weren't watching it, but it was on, and I couldn't help myself but look at the headlines that were on the news. And for me, not watching the news in maybe months, maybe 6 months or so or more, you would have thought the world was ending. It gave me a reality check to the real estate market that we're in all the time as real estate professionals. I look to consume what's important to me, which is stuff about my business, stuff about the real estate market, and just things that interest me. So this is going to be September's housing market update as to what we see right now in comparison to what a lot of the noise is in the market. My name is Stubbs. I'm a team leader and co-founder here at the SB Luxury Group. So let's dive into it. Now, a lot of the places out there that are giving a ton of data on the real estate market are pulling data that's old, meaning 30, 60, maybe even 90 days ago in some stances. So for us, having boots on the ground and doing a lot of transactions and helping a lot of families right now, we have a good idea of what happened, what is happening right now, and a projection to what's probably going to happen in the next 6 months to a year. Okay, so there's a couple of different topics that we'll hit on. First, with inventory, is we have had no inventory on the market relative to what's normal for a really long time. If you looked at charts from 2020 down to the beginning of this year, inventory just went straight down on the charts, down from 8,000 or 9,000, which is normal, all the way down to 950 homes on the market. Now, from the beginning of the year, we had rates increase, we had a lot of uncertainty happening in the overall economy, and as we know, interest rates went up as well as inventory did, so there were more homes on the market. Well, for the last few months, we've actually plateaued at 4,000 homes on the market. Now, here's the other thing is, when we had 950 homes on the market, the average time they were selling was 7 days. It was very, very quick, maybe 14 days. And now we're looking at probably being in 60 to maybe 75 days will be the average, and that includes the ones that have been on the market for 2 or 3 years that are $70 million in Newport. So it all kind of evens out, but a normal house should take somewhere between 30 and 60 days to sell, assuming it's priced right and looks good. Here's my point is, with 4,000 homes on the market, buyers have a lot more to choose from and sellers have more competition. But with those 4,000 homes, a lot of the ones that are sitting on the market right now are either way overpriced or just don't look that great, in the sense of the way that their price is not in line with how they look or how they're marketed to the marketplace. Maybe they need a renovation and they can get that number, or maybe they're just overpriced. So buyers are out there and realizing that, gosh, they're looking online or they're looking out in person, they're not loving anything they're seeing. So there's a huge opportunity right now where there's some stagnant inventory in what is a little bit of an uncertain time still. But here's what we know for sure is, towards the end of the year, inventory always decreases, and it's already happening from 4,000, not from 6 or 7 or 8,000 like normal. The other thing is, of those 4,000 homes, I would say maybe 60% of them are unappealing to the market, meaning they're either overpriced or don't look great. So that leads us to our next topic, which is interest rates, which all the headlines, we'll put a few up on the screen, it's super volatile, but its interest rates go in hand with what's going on in the overall economy. It's extremely valuable to remember why interest rates have gone up the way that they have. It's to combat inflation, which we think is plateaued, but we need more information to find that out. But in the meantime, interest rates keep going back and forth between, let's just say, 5 and 6%. So buyer affordability continues to go up and down, but what we've found is that even with rates going from just the last 2 weeks back from about 5.25% to 6%, buyers are still out in the market. But I would say for everybody that's looking in the market right now is taking advantage of an opportunity that buyers have not had for the last 2 years, is taking advantage of the sellers that are overpricing or under marketing their properties, buying at a lower value, paying a little bit more on rate, but there's also no competition like there was two years ago. And there's a very high likelihood that there's going to be a huge refinance opportunity in the next 24 to 36 months. So that means if you can get out and get into a property that you really like, pay a little bit higher interest rate where you can, might need that right off anyway, and then refinance that when rates come back down to the 4 or 5% that the lenders are projecting over the next couple of years. So last, let's talk about the projection for what we see. And if you've been watching these market updates as we've been putting them out, not a whole lot has changed from the prediction. Is prices went like this for 2 years and they kind of broke up to where, for the people pricing their properties, you're probably not going to break the record that was set in April, May, or March. Is you're probably going to be at maybe 2 or 3 sales ago. So if you were in the housing market the last couple of years, a seller would say, hey, my neighbor just sold their house for $1 million, I want to list for $1.1 million. And then you might get multiple offers and it might sell for over that. And then the next person that sells says, I want to sell for $1.2 million. And that's what happened over the last couple of years. Well, now we're back to a normal market where the last 6 or 7 properties that sold, depending on how your house looked, probably going to be somewhere in that range, which is totally normal. That's how a healthy market acts. So everything that we're seeing right now is a healthy market in Orange County with a little bit bit of volatility in the rate department, but buyer demand is staying strong and inventory is not continuing to increase. So here's a projection, is interest rates are gonna keep staying probably where they're at now, maybe a little bit higher, and then into the next year, we might see some tapering. But there's a higher likelihood they're gonna stay at or above where we're currently at, which is about 6% as we're filming this. And there's a pretty high likelihood that with the supply we have and the still strong demand, we're gonna continue to see prices stay in that 3 to 5% appreciation mark, which is totally normal. In the last couple of years, we've had 15 to 25, 30% appreciation, depending on which market you're looking at. Never was normal. So it's really important to realize that we went from what was insane, crazy seller's market back to a normal market, and just happened very quickly in the last 3 months. So if you are a buyer out there, or if you're a seller, now matters more than ever is one, who you're working with and what the strategy is you have to get into the property or to sell and make that next move. So if you have questions, you want to talk about your situation, as always, reach out to us. And if you have any questions, let us know. Thanks for watching.